Today, I'm not going to tell you which stocks to buy. I'm also not going to talk about charts or ratios or what the news is saying. Instead, I'm going to do something different. I'm going to ask a portfolio question and then I will let it answer. Because here's the simple truth. Most investors don't have data prop. They don't have a tool prop. They have a thinking prop. And that's where we would like to address today. That's exactly what today's episode is all about. So what do? Let me ask you something. How many apps do you use to invest? One for stock data, one for charts, one for news, and one for trading, and also one Excel on the side. And after all that, the final decision still comes from the gut. So how do we solve this? And sometimes those decisions even comes from the headlines. Well, markets today are fast. Information is noisy. Opinions are everywhere. But insights, nowhere. Or rather rare. So the real question is not which stocks should I buy. The real question is, what should my exposure look like today? How should I be thinking about markets right now? This is where IntelliWealth comes in. And what does it do? It's not a trading app. It's not a tip engine, but it's a thinking layer between you and the market. That's where we decode the market intelligence into strategies. Instead of forcing investors to stitch together data, we asked a different question while building IntelliInvest. What if a portfolio could think the way a good investor does, but portfolio don't think? So today I'm going to show you that thinking in action. So where do we start? So we'll do it live, step by step, no shortcuts, just straight questions. And here's the question I'm going to ask IntelliWealth today. Which sectors look strong for the next 1 week to next 1 month? And what does that tell me as an investor? So which sectors look strong for the next 1 week to 1 month? And what does that tell me as an investor? And while it gets the answer, let me explain you. So I didn't ask for any stock tip. I didn't ask for a target price, a buy or a sell call. What actually I asked was about market insights. So what we want first is context. So when this question goes to IntelliWealth, here's what happens behind the scene, conceptually, right? So it pulls the stock forecasted prices, groups them by sector, adjusts for market cap, separates short-term signals from positional trends, and then it gives us a view. And we will go through that view together. It actually has filtered out a lot of noise for us. Now let's look at the data which has come out. It says market snapshot is selectively bullish. So IT demonstrating robust average forecasted price about 13%, indicating a strong positive momentum. Chemicals, a forecasted price of around 9%. Non-ferrous metal around 8.5%, and mining around 7.5%. And if you look at broadly, these are broadly the beaten out sectors in the last couple of weeks, particularly the IT and the non-ferrous metals in the mining space, not the chemicals. So it has given you where the reversal is around the corner and where the upward trend is continuing. The next 1 month, I think we'll come back to this again, but let's try to first understand this. Now it is talking about 13 to 7% return, and it is also talking about 4-5 sectors. So what immediately stands out is that the leadership is not broad-based. It's a few sectors clearly standing out. For example, IT. So multiple large cap IT names are aligned in the same direction. So what that means, there's a bounce around the corner. Now it can pan out in 1 week or up to one month. And this is all because of the AI news which came into play. Because the leadership is coming from large cap, it usually means the institutional participation, and it's not retail noise. Now, this tells me something very specific. Short-term momentum is selective, not euphoric. This is not a buy everything market. That's also very clear because of the 5-6 sectors which has come out. It's a market where we need to be very selective. The allocation matters more than stock hunting. Sector bias matters more than stories. And that's what we're going to do. Now, let's stretch the lens to 1 month. And that's interesting. You will see, I think the same sectors are expected to do well in the next 1 month as well. So probably there's a broad trend which is coming into shape, right? So there are some key rotational insight as well. So it says basic material sectors like chemicals, non-ferrous, mining are showing strong potential, suggesting investors' interest in these cyclical areas. Traditional sectors like finance, bank, automobile, and crude are showing moderate and stable growth, but are not leading the market. What investors should do is probably being overweight on these sectors, neutral on automobiles, ancillaries, finance, banks, and crude oil. And there is no underweight sector right now. So overall, it's bullish. That's where it comes from. And there are a few disclaimers as well, but I think we understood the broader thing which came out. Some sectors that look strong in the short run remain strong in the long run as well. Others fade. And that's also becomes clear. Although in this case, we have seen that the same sectors are continuing for the next 1 month. Because sustainable trends shows consistency over across time frames. This is where IntelliWealth shines. It doesn't just tell you what looks good. It tells you why. It also tells you how long that strength is likely to matter. And that what helps you in building long-term wealth. This is actually how professionals think. They don't ask, will this stock go up tomorrow? Rather, the question is, they ask, where should my capital be sitting for the next phase? That's a very important question. And when I step back and look at the full picture, a few things become very clear. This is a selective leadership, not a stock picking market. It is sectoral, not defensive, not euphoric, not broad-based, which means stock picking without context is very dangerous. Blind diversification is lazy. Thoughtful allocation wins. This is exactly why most investors feel confused. The market is not screaming, it's whispering. And you need a system that can hear whispers. And that's what we have tried to build. Now, here's something very important. AI does not replace judgment. What it does is it organizes it. And who takes the call is a human investor. This is how I would use this output. As a human investor, I would go tilt my sectoral exposure towards consistency, avoid chasing short-lived spikes, and keep risk under control. Because the goal is not to be right every day. The goal is to build long-term wealth, to position ourselves correctly most of the time. That's the difference between trading and investing. You cannot be wrong in trading. Or rather, you should be ready for losses in the short run. Let me leave you with one thought. Most people ask the market questions like this. What should I buy? What should I sell? But better investors ask, what should I avoid? What should I hold? What should I reduce? And the best investor asks, a portfolio question. What does my portfolio want me to do right now? And that's the thought I would like to leave you with. That's the question actually IntelliWealth is designed to answer. So try these kind of questions and let me know your feedback in the comment section. Do like and share. The future of investing is not faster trades. It's better thinking. And the edge won't come from information. It will come from how intelligently you organize it. Thanks a lot for listening. And we will continue this conversation in the next episode. Have a good day.